Peace, YouTube. It's TerrenceRe giving you a little market update today on October 13th. On this Wednesday, this hump day. Right here, I got the E-mini S&P 500 futures, and I'm just messing around. I got doing a little scalping, so you can see, I don't know, down about $8 on the day on the little scalp. I do this sometimes just to stay busy in days when I don't have like a whole lot going on in the market. So they're not real expensive. You can come in here and, get short, get long. See, I'm gonna snatch a little profit right here and then get out and move on to something else. Maybe catch another setup if I can get it. All right, so let's get to what I want to do. I got a few charts that I want to go over. Go over a quick market update. So right here, looking at the VIX is down about 48 cents. So it's really, if the VIX is basically flat, that's not a real big down day, but vol is down. So, and then the market, so we got negative 118 on the advanced decline line as far as the S&P 500. So the majority of the stocks are down slightly. And we got, let's see, we got the NASDAQ is the only thing that's up. Well, the NASDAQ is up. So you got the futures for the NASDAQ up 58 handles. The Dow is down. And then we got the Russell, your mid caps, it's up slightly. So with the S&Ps down, the Dow down, NASDAQ up, Russell up. So basically pretty much a sideways trading day, flat. Bonds are up though. So if you're in the bond market, the bonds are up. You can look at the TLT right here. It's up $1. You got gold is up. Now gold is moving today. That's one of the charts that I wanted to take a look at today. So let's go look at the GLD, which is the ETF of gold. Let's pull up the daily and take a look at it. And so for the most part, I'm just going to clean this up just a little bit, make it easier to see. So you can see we got a big green candle today on gold. Crossed over the Wilder's smoothly moving average, and we got a nice move. Now I'm fundamentally, I just think it's like people are probably panicking, that we got a lot of risk in the market. Oil, energy is up. They're saying that we're going to have higher prices on natural gas, because they're saying, if, according to CNBC, I was watching this morning, if we have an extremely cold winter, or that gas prices could go up, natural gas prices. So, especially in Europe. So that's one of the things. So I guess that's one of the fears that they're putting out on the news. So what happens? Algos get a hold to that information, and you see portfolios going into gold. Which gold is still going to be that old school natural hedge. Bitcoin is up. So, a lot of people are looking at Bitcoin as being a hedge as well to equities. I don't know how we haven't had that much. Bitcoin doesn't have a history as long as gold is. So, or does, as far as that is concerned. So that's why you're seeing gold up. It's up almost 2% today. So that's a big move. And also, if I look down here at my sizzle scan, this is just showing like down here for like basically things that are trading in the options market, and they're really trading, basically got a high volume in the options market. And so that's what this sizzle scan is. And a lot of these are gold or metal related, commodity related stocks. You got GLD is down here, GDX, SLV, which is silver. Silver is up 2% on the day. GDXJ, IAU. So today, everyone's going into metals, precious metals, gold, copper, things like that. You're seeing the commodities move today. So I like this. I actually like this chart on gold. I am long gold as far as in my long-term portfolio. I'm long gold. And so another way, so you can get long. The reason why I don't like to get long the gold ETF, this one GLD, it doesn't pay dividends. So to hold that, I would trade this like option wise, but as far as like holding, the one that I own is GOLD. And that's because it pays a little dividend, but the chart is similar. You see it, and you actually got a trend line right here that if we can get a break in this trend line, we could be off to the races. Look at that. I've been talking about, if you're following the channel, I've been talking about gold for a minute now. If we can get a break of this trend line, we can run. So I own that. And I also want to talk about AFRM. Get a shout out to my mom and wish her a happy birthday. And she texted me this morning about AFRM. I did a video on it little whiles back, maybe a couple weeks ago, right around earnings time. So it was about a month ago, because I did it right before earnings, and that's when she had asked me about it. And she's making money in it. So she got in it. She got in it when it was around what, $93. So she's doing real good right now. I got a text from her this morning. How now the thing is with it right now, looking at AFRM, it's at all-time highs right now. It broke the all-time high, and you got an IV rank of 67. So that means that is ripe to sell premium in, but is moving to the upside. So um I'm not going to advise her what to do. She's been doing well with it right now. Me, I don't know. I don't know what I would do with this. I guess you hold it, maybe take some off the table. It just depends on what's your long-term view of the stock, but it's running. So, and it may have a little bit more room to run. It's not overbought quite yet. It may be after today or maybe by the end of this week, but it was overbought right here, and it pulled back, jumped up some more, got overbought, pulled back, jumped up some more. So maybe you take some off the table, catch a little pullback, and then get long it. So that's that. I also wanted to look at the XLY, which is your consumer discretionary ETF. Now with this one, you can see, I don't know if you guys can see this, what you would call an ascending triangle. You could call it an ascending triangle or a wedge, either or, something like that. You can see it coming to a point. You guys see that? Let me see if I can draw this right. I'm just copying over the little dotted line that I got set up to where it will show that. Let me see if I can move. That's good enough. All right. So you guys see that? You see where it's touching? You got touches. You got a touch here, touch here, touch here, back up a touch here, touch. So now we got a bull flag right here. I love my flags. Break up, pull back. I put my fibs on. This is this is the 38.2. It touches and it broke this high. So now we start looking at, when I get that type of move, you can start looking at something like, what are my take profit levels? Now, if you want to get long this, your first take profit level is right here at 185.54 at the 61.8. So that's only about, maybe about $2. Now my stop is going to be down here. So you're going to risk $5 to maybe make $2 if you take that, if you just want to get that approach. The next level would be the 100. So basically would be your A, B equals C, D move. So basically the length of this right here from bottom to high will equal this from bottom to high. That's the more classic approach. I would more likely take that. If I was gonna, I would take this one right here. if I was going to trade this. So you're risking about 5 to make, if you got in right here, about 4. So that's not bad. That's almost 1-to-1. I like that trade. I like the setup. You know, it's not a bad setup right there. Now we also got, now keep in mind though, if we're just looking at this, let's just look at it for what it is. This is a 3-year daily chart. So you're at all-time highs almost. Was that the all-time high was right here at 186.39. So to get to that point right there at the top of this ascending triangle would be a new all-time high. So keep that in mind. With the setup, I most definitely think that, that it can do that. So that's XLY. I want to take a look at, since we looked at a firm, let's go ahead and take a look at Merck. I added to Merck in my long-term portfolio. So, I got the pullback off of these highs. So I definitely think at some point, now you could be sitting in this for, that's why I say in my long-term portfolio, you know, just adding a little bit as it pulls back. And one of the reasons why I got my breakup, my pull back down, I would have liked to have seen this back here, but I didn't. Would have loved to have caught this gap up. But I'll trade the fifth wave, which in this instance would be 1, 2, 3, and then 4 is going to be your chop. So we're going to be sitting through chop. But the good thing about owning Merck is Merck pays a dividend. Merck pays a quarterly dividend of 65 cents. So if you own Merck, and obviously you have news surrounding Merck with they have the pill. So they're working on a pill and trying to get it authorized to treat COVID-19. So you'll be able to take a pill orally. So they're trying to get that passed, and obviously we know what'll happen if that gets approved. So you can hold this. You'll get paid to hold this, even though I don't mind holding stocks for a long time that pay dividends, because it pays a dividend. And obviously, I actually think it can get all the way back up here and make highs up here around $88. So that's one of my try. I've been talking about Merck. I like that. I like the stock. Um, I don't know. It may close this gap. It may not. It may find support somewhere in here and then turn around. But like I said, it pays a dividend, so I don't mind owning it in my long-term portfolio. So I bought some shares in Merck today. Let's look at we'll take a look at Amazon. And I'm just looking at Amazon because Amazon being kind of tied to the hip of a firm. And also I was watching Josh Brown on CNBC. I like Josh. He probably one of the only people on the network when they doing their little talking about stocks that I like. And so he's pretty sharp when it comes to picking stocks and stuff. So him and another analyst were kind of disagreeing about Amazon, but so it made me look at the chart, and we got Amazon right here. We got a triangle. I don't know if you guys can see this triangle. I'm gonna close this up, make it big. You guys see this? See this triangle right here? I'm gonna draw it out. I'm gonna take my fibs off, remove that, and then we just looking at that. And so got a nice little pattern. I like to see patterns in my charts because it gives me something to look at, and I like to see patterns because if I can see pattern, for me it's like looking at human behavior, like human buying behavior, like how we're buying, and it's mapping it out on a chart, whether people believe it or not. So you can see we had this from this candlestick right here, this long wick. So basically this is, that this is support right here. Basically the market went down into here and the bulls came in and bought it all the way back up. I mean, this was on one day. You got this long wick of a candle and the market turned right there. So this it's safe to say that this is some heavy support right here, right? Let's just let's highlight this area. Heavy support down there. So we got support down there at that level, right? And you can see the market came down to right in here, turn, here, turn, here, turn. And so right here, it made a low and did not come down here. Now, if it breaks this level, I think that would be bearish because it could probably break this level and come down into here. But because it stopped right here, I want to see it take out this high. If we can get Amazon to take out this high right here at, let's call it 33.27, basically cross over the Wilder's moving average right here, then you might be able to look to get bullish, because if it break and then come out of this trend line, it may run to new highs. And so the commentator on CNBC was bullish. And so it made me, they were going back and forth about it. So I said, let me pull it up and take a look at it myself. And I like that. We got a little flag forming down here on the RSI. You want to see it. You want to see it break above this right here and get to the 50 and take off. Might not be a bad move. We may be beginning to see maybe an up move in Amazon, maybe. So, and with a firm going up, that may not be, you could maybe just stay long a firm or get long a firm, or, kind of watch them together and see how they move in tandem. I wanted to take a look at Uber. Uber got a nice, I guess you would call it descending triangle. So you got your up move. And I actually think that Uber can make it to all-time highs just based off of what I'm looking at. I got right here, you got your up move, your pullback, boom, took out these highs right here, hit the 61.8, hit the 100. Excuse me. Gapped up over the 161, pulled back, retested it, took off again up to 261.8. So here we are. It took out the next level is up here at 84 bucks. So if Uber can get to 84 bucks, now look at this. Look at what it's breaking out of. If you guys can see this, I'm gonna come look at this. I like to see patterns, because when I see patterns, then I know that patterns make the chart clean. Like, it's not erratic. It's trading in some type of sequence. And I like to trade around those patterns. Now look at that. This little triangle, it came down to the apex and then jumped out. Boom. Gapped up. You got your gap. So now you got your gap. You can use this as support if you like. And now let's see what it does. You can take Uber all the way. Maybe this is pretty much like, I liked all of these charts. The ones I liked the best was XLY, and I like Uber the best. Uber can run. It's right now at 46 bucks. Now I'm not gonna call that. I think it can get to 84 bucks, or we'll call it, make it a modest 80. Now, I don't know when though. I don't know the time frame. This chart I'm looking at goes all the way back to, what is that? Pretty much 3 years. This is a 3-year chart. I didn't know if May of 2019. So to do all of this, so that doesn't mean that it's gonna happen like overnight, but I think we got something here. So this may not be something that you can put away and hold long term. I think I'll be buying some. I think I'm going to buy some Uber as well. Put that in my long-term portfolio and just sit with it. Um, I'm gonna do some rearranging in a little bit, but I like Uber um, for that particular reason. So once again, I hope you guys I went through about 5 or 6 charts. I'm gonna start doing this a little bit more regular too, little charts. So if you like the technical analysis that I'm doing, and it helps, and if it is helping you get some ideas, hit that like button, hit the subscribe button, share the video. Also, take a look at down in the description. I got a link to Manset, um, some real nice underwear, men's underwear that I like. I really like that's like my my mission to find the perfect underwear, and I think I found them. You're a man. These underwear they make it now. You don't have no room. You know, you they too tight. You end up with you're trying to pull them down all day. So I think I found the right pair. Click on the link and check them out. Go to the website. I really like them. I like the boxes the best. The trunks, fit pretty well too. But I like the longer ones in the leg. They give you a lot of room. So check that out. Hit that link. And with that, I'm out, man. Peace.